So I'm back in Philly, and it was a great weekend. After a dismal first half, my Giants stormed back to beat a mediocre team. There is still hope. And there is activity in the market now, and it seems to be picking up as summer has wound down and it's feeling like fall out there. The auction houses are starting to travel to prepare for the next cycle, and we're seeing lots of chatter on where we expect pricing to go from here. Now, I think it's important to look at where we've been over the past year and how the market held up during the summer. Now, obviously, the fourth quarter last year and the first quarter this year were pretty weak, with prices falling and demand, especially in the high end, waning. I think we all expected the auctions in May to be weak and the summer to be weak and the market to continue to drop. Now, much to my surprise, the spring auctions were solid, and by any account, the summer stall and price drops never really materialized. We've seen the market remain very flat, and while dealers have not returned to the days of buying for inventory, they are still filling calls, and the end consumer market has remained active, as clients seem to be taking advantage of pricing that has been on average 15 to 25% below last year's levels. Now, it's always difficult to look forward and accurately predict where the markets are going, but over the next 12 months, I expect we're going to see more of the same. I think overall markets will remain flat as we head into a messy election year, and barring a big geopolitical crisis, I expect the markets to remain steady. Post-COVID demand remains high, more and more collectors have entered the market, and buying and selling watches tends to be an addiction for many of us, and I don't expect to see that change anytime soon. Now, while the rising tide lifted all boats, a market correction never performs equally. I think we'll see some brands remain stronger than others, and I think we'll find the other brands that have benefited from the lack of availability might have a much harder time bouncing back. So here are some places where I see opportunity and some places I see continued weakness. Just like not all brands fall and rise equally, even within a brand, we see variations in values. Now, Patek is one of the most important brands in the market, and I believe it's a brand that has some of the most potential over the next year. I don't believe Nautilus and Aquanauts are going back up, and I think they'll remain stable over the next year. But I do think there's some potential upside on core Patek models. Perpetual calendars, chronos, I believe they're down to a level where we were seeing them 5 years ago. I don't believe buying a 5270 or a 5970 at these values has any risk, and I expect these high complication Pateks to represent a great value in this market. Now, FP Journe has been a bellwether for the independent brands. It's one of the most collectible brands and had a huge run-up over the past 4 years. Now, values are well below their peaks, and the interesting part of the brand is really rarity. Now, because of the run-up in prices, more and more pieces hit the market, as many collectors cashed in some great profits to either trade up or just sell into a strong market. I expect over the next year, less and less collectible Journes will be available in the market. Obviously, shortages of supply always drive prices, and I expect we'll see a very stable market with a potential increase on the brass movement pieces, which are the most collectible models in the line. Now, Audemars had one of the most epic run-ups of any brand we have seen and a huge pullback. And now many of the sports models have come back very close to retail, which makes much more sense to me. I still think many of these models are being held by dealers, and we still might see some weakness over the next year. AP still produces too many Royal Oaks, in my opinion, and new models continue to hit the market, so I don't expect we'll see a bounce back anytime soon. Now, on the contrary, I think some of the neo-vintage pieces still have potential to strengthen. CP Cartiers, early Daniel Roths, Breguets continue to be discovered by collectors and should at worst remain stable, but I think long-term there's upside here. Now, Patek is a brand that worries me. It has a limited history, came out and told the market they're going to dramatically ramp up production, which always puts a risk into the market. And we've started to see them fall dramatically. Vacheron is another brand that concerns me, as they've continued to push out too many models, especially their precious metal and perpetual calendar pieces. And last but not least, I think Grubel Forsey will continue to remain weak. The brand's new models are great, but the fear of the resale value and potential run-up in production will put downward pressure on the brand.